Homeowners are bracing for another rise in mortgage interest rates with an expected lift in the official cash rate tomorrow.
The Reserve Bank is expected to lift the OCR another 50 basis points to 3% to curb inflation. But it's a move which could cost the average household an extra $60 a week. Demelza Leslie reports.
Mortgage interest rates have been rising fast over the past year, taking one-year home loan rates from about 2% to 5%. Tomorrow, they'll likely go even higher.
It's pretty certain we're going to see the official cash rate go up by 0.5%, so it'll take it to 3%. The question really is about what happens after.
For first home buyers who bought last year when property prices were at their peak, they could find themselves with mortgages larger than what their homes are now worth.
Not good for the mindset, however it doesn't really mean too much until you actually have to sell.
The pressure on household budgets from the rising rates intense.
So if they've got a $600,000 mortgage and it's floating, it might be $60 a week difference.
And $60 a week can mean a big squeeze on already tight spending.
We're just on floating, so we don't want it to keep going up too much.
It seemed inevitable, but it's still, a bit hard to cope with.
Rising interest rates putting the dream of home ownership further out of reach for some first home buyers.
We feel like it's just getting harder and harder, it's not getting easier.
You're going to focus on other things, you're going to spend your money on other things and just keep waiting.
But it may not be all doom and gloom, depending on the Reserve Bank's future forecasts. The Reserve Bank's latest forecasts in May implied the OCR would be at 3.5% by the end of the year and possibly peaking near 4% by the middle of next year.
Wholesale rates may drop if there's a change in some of that messaging tomorrow.
So, Uljala's advice to those who need to refix their mortgages by the end of the year is don't rush into it. Demelza Leslie, Newshub.